What's up, everyone? What's up? I'm hoping you all good. We are good this side, and we are back with another video as we all promised you. And then today we are dealing with gold. We are trying to predict gold where we think it's going to be in the near future, and we're going to be using the Elliot Wave theory to find the direction and the price predictions where we think it's going to stop. We find a little bit of the correction, or where we think the correction is going to terminate, right? And then we're going to be using for extra confirmation on where we should enter in the markets. We're going to be using the order block strategy, because we found out that it's actually good when it comes to entries, right? And then in combination with the Elliot Waves, it's going to be something else, something way too good. So let's try to find these predictions, right? So as you can see, the trend is bearish, right? So we do not go against the trend, we go with the trend, right? So we always know that we have five waves, 1 2 3 4 5, right? And then we need an ABC correction in the opposite direction, and then once that correction finishes, we resume the actual trend, right? In a higher degree waves. Let me oh my god, let me do this. 1 2, okay, I'm gonna need to do this. So it's going to be something like this, right? 1 2 1, 2 3 4 5, and then we have an ABC correction, and then we resume the actual trend that we need, right? So after that, as you can see, okay, let me try to these, what happens after this, these waves become mono waves sometimes. If you have them at that time, they are just an actual waves that you are working with, but once they complete, and then they give you its ABC correction, right? After they complete, and then they give you to finish it cycle like this ABC, they tend to be mono waves, because that is when you restart the count from 0 to 1 2 3, down there, 4 5, right? It's going to be down there, it's going to be down there, it's going to be down there in a higher degree. So once these waves get complete, they give you an ABC correction in the opposite direction, which in turn be 1 and 2. Let me change the color and the degree. It's going to be primary, and then maybe black. So it's going to be something like this, right? So okay, I don't want the colors to be the same. So as you can see, it's 1 2 3 4 5, right? The waves that we're actually working with, and then once they get complete, they give you an ABC correction in the opposite direction, which in turn be wave 2, because wave 2 is made of an ABC correction, right? Just like over here, it's going to be an ABC making wave 2, and then they give you 3. But once this finishes, they in turn become the higher degree waves. They become mono waves that are making the higher degree waves. This is why when they get finished over here, we resume this trend. It's 1 2 3, right? So it is just that simple. So we're going to go to the actual structure, and then let's try to analyze it. Let's see where we're heading over here. As you can see, it's a bearish trend, right? And then it is just currently bearish, as you can see. So let's try to predict it, and let's find out how you would have maybe sold over here, or over here, or maybe over here, because the Elliot Waves deals with these corrections over here, the termination of the correction, right? It's 2 and 4. So let's do the measurements. So we all know wave 1 is actually 61.8 of this leg, of this impulse as 1, right? So the correction will be 61.8, or 50% is also accepted, but in most cases it is 61.8. And then, as I told you, we're going to be using the order blocks to find the termination and maybe to find out the entries and all that, and how to put our stop losses, right? So let's do the measurement. The trend started here using the Fibonacci retracement tool, and then it's ended over here. As you can see, this is the lowest low, so it should go up to 60%. As you can see, we almost touched 60%, but the actual candle is turned to 50%. So 50% is an acceptable percentages, but it's moved beyond that, right? So it is good. And then why it terminated over here, right? So okay, we all know it, wave 2 terminates over here at 60%, but let's use the other blocks to actually find this entry. So as you can see, we had a little bit of a spike here and over here, so this is what we're going to be using. In this bearish trend, we did have a bullish candle, so we're going to be using this candle. It started over here and then ended over here. So we all know the other blocks rules. They say you take these candles, right, and then let me do this, and then the stop loss is just exactly at this top over here of this candle, of this spike. So it was going to be something like this. When you entered over here, your stop loss was going to be here. All right, yes, and then you would have entered maybe when you see a bearish candle confirming maybe over here, because it's closed over, but it is how you enter. But the stop losses are going to be here, the termination point in this price, exactly at the end of this candle, right? Because this is the only bullish candle when it started falling, right? The early bullish candle, this is the one, right? So I mean, we do have the other ones over here, we do have the other ones, but we need this one as it was climbing higher and higher in the form of an APC correction. Remember that, because Elliot Wave theory says wave 2 needs to be in an APC form, right? So as you can see, this is an ABC form, right? So we did have in our APC pattern over here, and then we completed the trend closer to 61.8. So this is how, okay, maybe you wouldn't have waited for this candle, because you know that that's in usually it is 61.8, so you would have tried to enter over here. Maybe if you go lower with the time frame, you would have seen this candle that you actually want over here, closer to 61.8, right? But in this case is okay, let's just go there. Let's go into maybe the 4th-hour time frame and see that means we need to take the actual order block using 4-hour time frame, right? So it was going to be this one, right? It is going to be this one. I mean, there is a lot of candles over here, but as you can see, you take the very last candle that is some kind of a spike, and then you're good, because the termination will be exactly at this top. So as you can see, it really holds. So this is how you would have found this entry and made your entry over here using this order block, so it's 1 2 in the form of an ABC, right? And then you are ripping 3, the longest wave in the market. And then okay, let's go to daily time frame. And then when we go back to daily time frame to actually deal with this wave 2, I mean wave 3 is the longest wave, but remember what happens within wave 3, right? It's either it has some 5 waves that are making wave 3, as we talked about using nice sunrise. When we demonstrate everything using nice sunrise, the video is actually here. You can, and I'm going to put the link in the description so that you can find the explanations when you are making maybe wave 3, so how wave 3 is made of mono waves. But in this case, you can just see it just in this pattern. I always treat this pattern like this. It needs some equal legs, right? It's just an impulse and a correction, and then an equal let's clone it so you can see the distance is somehow equal. So as you can see, and then closer to this point, you can always find your tree, right? You will find your tree, and then the termination point of 3 actually, and then you can now expect to have your correction as 4, right? So this is so clean and clear and simple, right? So now you have to find the termination point of a correction of 4, right? So let's put our waves. Let's number our waves. 2, 3, 4, right? 5. So let's number our waves. We know that wave 4, the termination point for wave 4 is 38.2, right? The acceptable. This is the last resistance because it is going higher. This is the last resistance for wave 2. It's 38.2% of the Fibonacci levels, and then we can also take 23%, but in most cases it'd be 38.2, right? So let's go and take the Fibonacci from where 3 actually started at the termination of wave 2, correction of wave 2, right? And then where it's actually ended. So as you can see, perfectly aligns itself with 38.2, right? As you can see. But again, let's use the order block strategy to find this correction, this the termination, like to make an entry, right? So let's try to make an entry how you would have tried to make an entry using the order block. So as you can see over here, we do have our bullish candle. This is the one, but and then we had another order block over here, this red candle, because after it we actually saw real action happening. So we need those candles once they finish, and then we need to see real action. This is why we do not use this one now, but we're going to be using this one, because after it we saw real change. The market started shooting down, so we're going to take this and then put this over here, right? So as you can see, right? So we're good. Let's put this, let's shade the breaker, the background, and then we're good. So the stop loss is exactly at this high of this candle, and then as you can see, it didn't get touched. The trade didn't get terminated, right? So it's something like this. So you're good. You are just making with 5. As you can see, just shooting straight down after reaching that 8.2%. You know that we need to surpass this level, right? Because we're making with 5. We're making with 5, right? So it is just something like this, easy and simple how we approach the market. Within wave 3, you may be making this 1 2 3 pattern, right? It's an ABCD pattern. I don't know how you call it, but I always clone this leg, and then we have a correction, and then it gives you an equal leg, or it's going to be made of an actual mono waves, right? 5 waves, 1 2 3 4 5, making wave 3 sometimes, because wave 3 is the longest wave. So you're going to be expecting some actions within it, some weird actions. So it's either these corrections, these patterns, or just some actual waves, mono waves going bearish, right? So it is just, this one was very, very, very simple, this entry. This is why we took it, and it actually went in our direction. As you can see, it's still going. And in fact, we're going to show you the analysis, how we dealt with it, but we did the bullish waves from this point up to that point. So this is why it's also wise to use some other lower time frame, so that you can have high confirmation of what is happening, right? Because we told you that you will have some waves, 1 2 3 4 5 mono waves, and once they get complete, they signal something, right? So let's go to 1 hour again, and then try to read some waves from wave 3 to 4, right? This is what we want. So as you can see, they are pretty much clear. It is 1 2 3 4 5, right? So let me do this: 1 2 3 4 5, right? And then they got completed, right? Simple. Each and every time it is the waves, each and every time. So let's do some measurements. As you know, wave 2 needs to terminate at least at 50% or 68%, right? It's almost did touch 50%, but I'm happy that it went beyond that 8%, right? It's almost touched 50%. Remember, it will not be always perfect. Remember that. So do not try to look for perfection, but try to find something that can work for you, because remember, now we introduced to you the order block strategy. So if you come here, you can see what happened over here and then over here. When you go down and down, you will try to look at the order blocks. What happens here is the latest order block, and then this is why everything didn't reach 50%. Now you see, right? The stop loss is at this price, and then as you can see, we never touched this price, but we almost did, but we never touched it. So he could, you now understand why we didn't touch 50% or 60%. But if we moved beyond this, it was going to be this. As you can see, it's also an order block. But let's remove this. Okay, let's go to finding wave 4, right? So wave 4, where wave 2 started, ended. So wave 3 started over here, and then if we say this is the termination point of wave 3, and then where wave 4 terminates over here, 38.2, as you can see, right? Where is the order block over here? Where is the order block over here? Right over here. When we moved down here, we did this last bearish candle, right? Last bearish candle, and then we can use, because after it we actually saw some real action happening. The market moved up, and then it tested this candle, the top of it over here. So as you can see, it all aligns itself perfectly fine. And you can make your entries pretty much good. So the stop loss is at the end of this bearish candle, right? As you can see, we did not touch it, right? So this is when you were making your wave 5, and then you were done, right? So we're good. So let's start to number our waves over here. Let's number our waves. It's going to be 1 2 3 4 5, right? Let's change the degree because it cannot be primary. This one's going to be minor, right? So we're good with this one, and we were just going to this 4, right? Remember that. So let's change the color to red over here. And then what happens when we approach this, because you also need a confirmation of some other patterns when you approach a certain point that you want the price to reverse from, right? So as you can see, what happens is that we started making an ending diagonal, right? Now we have a new term. It's an ending diagonal. An ending diagonal is made of 5 waves, right? It's made of 5 waves that signal the end of a trend, and then they tell you that there is a trend that is imminent. We may be in an ending trend, right? So as you can see, if we put this and then these lines like this, okay, I'm gonna have to remove some lines. I don't like when there are so many lines. They will start confusing us. Yes, we're good. As you can see, so we need to start it over here, right? 1 2 3 4 5, right? And then we made our top over there, so we're going to change the color to maybe this color. So as you can see, the ending diagonal signals that there is a trend change. There is a trend change that is about to happen. There is an imminent trend that is. So this bullish trend that we are writing, this bullish trend, these mono waves that are making wave 4 of these waves, right? Of this wave, is about to change direction, is about to end once it arrives, once it makes this wave 5, right? Let's see the analysis. We did analysis. Okay, this is where the, let's see. Oh, actually this is what we want. So 1 2 3 4 5, right? And then once it approached this area, we made it, and 1 2 3 4 5 again within this these lines, right, as an ending diagonal. The ending diagonal is just made of 5 waves signaling a trend change, right, an imminent trend. So as you can see, we are so moving bearish, and then once we reach this top of 5 over here, this line, once we make this 5, we need an impulse and then an APC correction in the opposite direction. So you now know this is 1 2, and then we're making 3 4 5, right? You're going to see that, you're going to see it's going to happen. So we need something like 5, right? But we don't know where, but we can do the measurements, right? We can do the measurements, and then we're going to, so we take our FIP extension, and then where it started and where it is ended, wave 1 determination point, and then this, oh perfect, determination, or the minimum length required. It doesn't mean that it's going to turn over here, it's just a minimum length required, right? And then this one ends at 38 because it is just let's do it, right? Let's do it. So it doesn't mean it's going to, it can move beyond this. It's just there's no problem, but it will do whatever it wants, right? But the minimum length required is 1.618. Is 1.618. So it's going to be something like this. Right? It's going to be something like this, and it's, I think we are done with this class right now. I think we are done, but I needed you to understand that how can you approach these waves, how can you approach them. If you are making a certain wave, you need to read within it. The mono waves will tell you what is happening. As you can see, 1 2 3 4 5, they told you that once they get finished, they're about to signal something. You would have done this when we were approaching this 3 over here as 1 2 3 4 5, right? As you can see, they are also here. The ending diagonal is also over here for 5, right? And then the trend changes in direction, right? Just so simple and easy. But we're going all the way down so that we can complete this huge cycling over here. This is how we approach gold. The analysis is over here, and then it's got posted in our Telegram channel. So if you're not in our Telegram channel, you might as well want to be there so that you can actually see what we're talking about, what is about to happen, and when we try to predict everything. So it's good. So I think we are done. We're going to meet on another video as well. So if you are new to the channel, please hit the like button and subscribe for the upcoming videos. They are very helpful, and it is helpful to be with you guys. So thank you. I'm going to meet on another video.